If you've thought about life insurance, I bet one of the last questions you've asked yourself is, how much coverage do I need? And if you've never asked yourself that question before, I bet you're asking it now. Now, if you've had a conversation with a life insurance agent or you've done some research on your own, you would have learned that the industry standard is between 8 and 10 times your annual income. Now, 8 to 10 times your annual income is a fantastic position to leave your family. But I do believe that there's a better approach, a more modern approach. This approach I call purposeful policy approach. Having a plan for your plans. Now, before we get into it, let me introduce myself. My name is Hanif Levy, and I'm a licensed life insurance agent. Now, my goal is to ensure that we're having serious conversations about family and finances. And this is my way of doing it. Life insurance might be the most unique of all the insurance products. And the reason why I say that is because of all the different types of insurance, life insurance might be the only one that doesn't directly benefit the insured, at least in its most traditional form. Of course, some people will say that you can have a whole life policy with a cash value, or a universal life policy that you could earn funds from, which is absolutely correct. But I'm talking about life insurance in its most traditional sense. But what it does do is it helps to ensure that your family can still have the life that you dreamt of for them, regardless of whether or not you're physically here to provide that. And as a man and as a father myself, for me, that is extremely important. Think about this. If you ask me for directions to get from point A to point B, and I pull out a physical map, and on that map, I circle A and B. Being the intelligent person I know you are, I'm sure you'll be able to figure it out and find your way from point A to point B based on that map, and even discover several different routes to get you there. But if I wanted to be even more helpful, what I would do is give you a smartphone with a map app, which will give you turn by turn directions to get from point A to point B, and is likely to give you even the most convenient route. That is a difference between the 8 by 10 rule and my purposeful policy approach. So, with the purposeful policies approach, what you're doing is you're giving purpose to every policy that you own. You're literally creating a plan around your plans. Now, what does this plan look like? Here it goes. When you're young and healthy, you take out a whole life plan, not a big plan, just something that's enough to cover your final expenses. Why whole life? Because whole life will cover you up to age 100, and the premium generally doesn't change. Now it has cash value benefits, but we're not concerned about cash value. Follow me. The next thing you want to do is you want to take out a term life plan that's equivalent to the remaining balance on your mortgage when you have a home. If you don't yet have a home, as soon as you buy your first home, that should be the second thing that you do. And you would have your spouse do the same thing. Then for each child, or when you start to have children, you take out additional term life plan coverage, not on the kids, but on yourself. We're going to talk about that a little more. Then you will set up a trust, a living trust. You will make the trust the beneficiary of all your policies. And you will also leave instructions in that trust that will say, on your passing, your whole life policy should be used to cover your final expenses. The policy that you took out on yourself for your home should pay the remainder of the mortgage, and whatever is left over should be retained by the trust. Those funds can then be used to purchase additional real estate or it can be used to put towards retirement planning or an annuity for your surviving spouse. And for the kids, you would want to make those plans at least $100,000, enough to cover a down payment. And the instructions that you would leave in your trust would be for those funds to be used as a down payment for homes for each child. So while the 8 to 10 rule gives you a general idea of how to get there, the purposeful policy approach gives you the exact steps, lays out the plan exactly for your family to execute. There are some clear benefits to this approach. One, it's durable. So it doesn't matter how the circumstances change, the objectives will always remain the same. Even if you're not as young and or as healthy, the same approach can apply. We'll just have to make some modifications and the premiums will vary based on your actual European age and your current health status. But the general idea holds true. Two, it's executable. You have laid out a clear and concise plan. Everybody in the family is accounted for. Everybody in the family knows exactly what needs to be done. Three, it's teachable. So you can teach your kids and have your kids do exactly the same thing. And that approach can be replicated for generations to come. So there you have it, the purposeful policy approach, having a plan for your plans. That, my friend, would be a fantastic way to start to build generational wealth for your family. If you found this helpful, share it with your family and friends. And drop a comment in the comment section. Let me know what you think. Feedback is always welcome. Hit the like button if you wish. But through it all, be blessed and be grateful.